We're already seeing the gold-silver ratio come down. I think it's 110, which is very, very high. Silver's outperformed gold a couple days. That's one of the things I look at very carefully.
Please join us for our next live stream, Sunday, April 19th at 9 p.m. Eastern. We'll go over current events, past guests, and of course, gold and silver news. Once again, our next live stream will be Sunday, April 19th, 9 p.m. Eastern. See you then. Hello again, everyone, and welcome to another edition of Silver Bullion Television, SBTV. I'm your host, Patrick Vieira. Once again, if you are new to our channel or you have not already done so, please do subscribe. Click on the bell to be notified of new updates and give us a thumbs up if you like what we do. We really do appreciate your support. Our guest today is the Silver Guru, David Morgan, publisher of the Morgan Report. David is also the author of The Silver Manifesto and Second Chance, How to Make and Keep Big Money from the Gold and Silver Shockwave. David knows the markets and he knows precious metals, and we are here to find out from David just what is happening with both. It's time to saddle up and silver up with the Silver Guru. David, welcome back to SBTV. How are you doing?
Well, Patrick, I am doing as well as could be expected under the circumstances, but I'm doing all right.
Amen to that. Yeah, under the circumstances, and quite a lot of circumstances. You know, David, last year we spoke, and how drastic have things changed since we last spoke in August of last year. It's crazy how this pandemic, which some people call a plandemic, has caused major disruptions in every part of the economy and in people's lives globally. How are you doing in the midst of all these changes with social distancing, lockdowns, travel restrictions? What's it like in your neighborhood?
Well, it's similar to, what the state mandate is. So most people are adhering to the, restrictions to basically only go out for necessities. In my particular area, I'm pretty rural. I'm in the second largest city in Spokane. The second largest city in Washington State, which is Spokane, and it's right on the Idaho border. And actually being outside the city limits by a fair amount, it's rural, and it's always sparser traffic. But it really hasn't changed that much. A few times I've gone out. I've gone to the hardware store more often than normal because I'm really amping up my gardening skills this year. I've been gardening for years, but this year I'm getting more serious than ever. And I've noticed that the feed stores and hardware stores are busier probably than normal. So there's that aspect, to be specific. And outside of that, definitely, if you go toward the main city, the amount of traffic is probably a third or a fourth of normal. So it's obvious that most people are, staying indoors.
Spokane. I remember back in the 70s, Pacific Coast League, AAA baseball, Spokane Indians.
Sure.
We'd always get to watch them come over to Hawaii and play the Hawaii Islanders. So never been to Spokane, but it brings back some pretty good memories.
Well, it's AAA ball, as you said. Their hockey team is pretty good. It's mostly Canadians. And then we have indoor arena football.
Oh, wow.
And they actually were the champions, which is a small deal, but it's still fun to watch. I love most live sports, and it's pretty easy on the pocketbook here. I think one NFL ticket would buy a season's tickets to the AFL2, the Arena Football League.
Yeah. Well, seed and feed, I think those are going to be pretty hot commodities in the months ahead. Precious metals conferences that you go to annually, are they canceled or are they still happening?
Yes, they have been canceled. I do mostly resource or metals type conferences, but also do some in the mainstream. The Money Show is definitely everything. And the Money Show was canceled. I think there was one more. Yes, there was one that was focused on resources. It was canceled. I had tickets to I'll just say it was Shania Twain, and that was canceled. So, they're being postponed. Now, the Money Show just contacted me, and we're going to do one virtual. We'll do it over the internet. And then they have one hard conference scheduled, I think in Las Vegas. I believe it was July or August, and I signed up for that. And then there's another one in Vancouver that is hard scheduled, and I signed up for that, or they signed me up, whatever you want to say. I'm going to be participating. So I don't know if they're absolutely going to happen, but it sounds as if that's probably far enough out from today that they will take place. So yeah, there was a delay. There was a cancellation of a few.
Yeah. Okay. Well, let's hope those things pull through for you, for us. How would you describe the state of affairs in the global economy at this point in time?
Well, the reset started. I mean, I've been saying this for years and years and years that you can't, print your way out of a debt situation. You're adding to the debt, so you're making the problem worse. You can't print wealth. Have a piece of paper that says silver on it. It's not silver. You have a piece of paper that says, food on it. It doesn't create food. Of course, we have a monetary system, and it's one that's really been badly morphed from something that was once based on sound money to something now that's gone exponential since Nixon took us off the gold standard in 1971. And that's, pretty easily shown by any chart that you want to look at the money supply. M1, M2, M3 doesn't really matter. They all go exponential. So we're at a point where von Mises called the crack up boom, where basically you have this kind of huge deflationary force going on, and then people are scrambling to get more money. You got to remember, I've said this before, but it's very important. During the Weimar Republic's hyperinflation, the cry from everybody was there's not enough money. Now, that sounds ridiculous when people say there's not enough money, it was a hyperinflation. But the point they were really saying is there's not enough value in the money. Mm-hmm. So they needed, quote unquote, more money to buy that loaf of bread next week. And I don't think we're going to see that kind of a hyperinflation in the United States. We're going to see a great deal of repricing. That's what my definition of reset is. You can make any definition you want, but things that you don't need, like a luxury car, will probably come down. Some of this high-end real estate or regular real estate. I mean, think of, I've kind of tipped my hat to the real estate investors over the years because all wealth comes from the land. It either comes from owning land and farming it or, taking off trees or going under the ground for oil or minerals. So all wealth really starts with Mother Earth. And so you've got to, take that into your thinking if you're going to look at, legacy wealth. You're going to look at how you're going to pass on wealth to several generations or a society. If you want to build, a society that starts on and below the land.
You mentioned the word reset. At what point or what line was crossed where you told yourself, okay, this is the reset?
When they told everybody to stay indoors. I mean, that obviously stops the supply chain. And, being a student of markets and of monetary history and just trying to stay awake and aware for basically most of my life, it's pretty obvious that once you stop something, it's hard to restart it. The book, The Collapse of Complex Societies, was a great read. I refer to it often. And regardless of what causes the problem, the main idea that I took from the book when I really thought about it was once something stops, especially in a society or in a civilization, it's very hard to bring it back to where it once was. And that's what we're facing. Look at the airline situation. You'll see it in transportation companies. You'll see it pretty much across the board. Then on the other side, we didn't plant as much corn as we need to plant. Our profitability is going to be less, but the prices will probably be pushed up if supply and demand has any force in this crazy market of ours.
Yeah. The market's Dow Jones Industrial Average is seeing a massive fall that is larger than the decline seen in 2008, the global financial crisis. Are we witnessing what could be the biggest stock market crash or perhaps what might be the biggest stock market recovery in history?
Well, both. First, I want to preface it with this. In the 2008 crisis, they call it crisis, the Dow Jones and the S&P were fair valued. Now, all markets go from overvalued to fair value to undervalued eventually, or undervalued to fair value to overvalued eventually. So in 2008, the very bottom, which everyone says is the bottom, look at a chart. It's the bottom. I won't argue with that fact. But what I will argue with is the fundamental analysis is it wasn't undervalued. It was fair value. So if we're going to get back to a reset that really sets things, back to reality, I would expect to see the major indexes go to an undervalued situation. So if we're at 5,000-ish on the 2008 crisis, I think we could see 5,000 again. I'm not predicting 5,000. I want the idea to be very clear, because in a hyperinflation or near hyperinflation, like in the Weimar Republic, stock market went crazy high, but you were still losing money. You lost less money if you're in the stock market, but you're still losing money because its purchasing power was being destroyed so rapidly. The only thing that really held up were the precious metals. But that's what I see, Patrick. I think we're going to we have these massive rallies up, and investors are very good, like generals. They're always fighting the last war. They're always investing in the last bull market. There's no refuting that the stock market has been a major market since the crisis of 2008. So everyone's going to go back into it. Oh, look, it's a buying opportunity. I'll just give you a little aside. I won't name names, and I know he doesn't watch the internet. He's about 10 years older than me. Nice guy. Just visited him, see how he's doing. And he was telling me how he can hardly wait to buy Microsoft. He can hardly wait. It's so low. And I didn't even bother talking to him about it, giving him my views. He's a big boy. He's an adult, but I'm just thinking, I've told all people that follow me, there'll be select places to go, but overall, the major trend is down. Yeah, there'll be huge sucker rallies, huge.
Bloomberg ran an article titled "Gold Bugs Finally See Their Predictions of Doom Coming True." Are we going to finally see the global economy, which has been on a monetary methadone binge for a decade at least, finally forced to go cold turkey and face up to decades of mismanagement?
Yes, and I just would like to add on to that, and I think I'll give credit to, I think it's Craig Ferguson and probably others, but the old ad here in the United States was, you can't fool Mother Nature. I think it was an ad for margarine or butter or something. But that's the idea, is there is an economic reality that's natural law that you cannot overcome, no matter how smart, how many algorithms, how many quants, how many computers, whatever. The truth is that there is monetary, or let me restate it, economic or financial reality that actually happens regardless of how many ways you have to manipulate it. And it's just huge. I mean, this is just, and I'm not jumping up and down for joy, Patrick. I mean, I was in my late 20s and I applied as to be a White House fellow, to work at the White House. You have to be nominated for it. It's not a real big story, but I wrote a policy paper on changing Social Security so it would work from then on. And I never got the first interview because I was being me. I was being gut honest and saying, hey, there's something wrong with the financial system and I want to help make it right. And that just got tossed to the side. We're not interviewing this kid. He doesn't know, what he's talking about. So that's life.
Well, we'll interview that kid. Is this crisis, though, is this crisis that central banks, is it something that they can solve with monetary policy and printing?
No, absolutely not. That's kind of been my theme all the way up, with the stock market going higher and higher and higher, and still saying people should put 10 or 20% in the metals and, some in the resource sector if they want to amplify their gains or losses in the resource sector. I mean, it's all natural resources when it comes down to it. Like I said, it's on the ground, which are considered resources, or under the ground, which are considered resources. And you can't print your way out of it. And it sure looked like it. It can't, again, coming back to the laws of nature or natural law, you can do it for a while. And, man gets this idea that, hey, we're all powerful. We can do it all. And they can for a little while. But in the greater scheme of things, there's no way. It's not going to work. So that's where we are. I'm convinced of it. If I have to come back in 2 months and eat my words, I will. I'll say I was wrong, but I don't see how. I mean, there's just way too much evidence.
Hey, we got a question from one of our viewers, Marvin Flyer. He wanted to ask you what's ahead. Is it deflation, stagflation, hyperinflation, or even a currency reset that involves gold and silver?
Well, I think all of them, and I don't want to be cute, but I think you'll see, deflation in some areas. I go back to an old saw of mine, and there's not a lot of difference between a hyperinflation and a deflationary depression. And that's, well, wait a minute, David, but both are huge uncertainty, massive unemployment, depression, people feel bad, despair, a contraction in available goods. I mean, a lot of things actually are the same in either case. In the one case, money becomes valuable, or I should say currency becomes more valuable. And in the other case, currency becomes worthless. So that's the difference between them. But the fallout between the two is pretty similar. So in one case, we'll say that currency becomes more valuable. That could be the case for people that can't find work. They're going to value every, piece of paper they get, be it euro, yen, US dollar, Aussie dollar, or whatever. So that, I think, is a reality. So that's that part of it. Then there's like what remains of the quote unquote rich that have so many of those things that are in like the stock market, and people that are planning to retire that have saved that much, seeing it deteriorate if it's not in, hard goods like canned beans, right? So, and they're relying on some kind of a steady stream of income to live out their golden years. And that's deteriorating very quickly, but there's a big pool of that money. So that money could go into perhaps an inflation. I'll use hyperinflation, although I doubt it, but, we'll just use the 20% definition, which I think that high is possible. So there's that. So am I lying? Am I not being correct? I think I'm being correct. Stagflation is where prices keep increasing, but there's no real increase in the physical economy. We've had that since the 2008 crisis. We've been pumping money and it's been working more or less and going into the stock market, but it hasn't made the physical economy much better. Yeah, you got an iPhone 11 and not an iPhone 5 or something. Whoop-de-doo. They basically do the same thing, and there's been some, but has there been a profound change in, agriculture? Has there been a profound change in energy? Not really. I mean, fracking's there, and I'm not a proponent of fracking, believe me. And yeah, we're quote unquote energy independent in the United States, but at what price? And what's the cost to get it out of the ground? 60, 70, 80 bucks in a lot of cases. So my point is, we've had stagflation. Now we're going to go to deflation in some areas, and we're going to go into an inflation in other areas. Are we going to tie back to silver, gold? I think silver is almost an impossibility to go back on a monetary basis, although it would be great for the people that, own silver, love silver, and understand silver. There will be alternatives in the crypto world that will be silver-backed cryptocurrencies. But gold could be used. I think it'll be a last resort. I mean, the March issue of the Morgan Report, I don't have it in front of me. I don't want to take the time to edit anything. But basically, I quoted Mark Carney from the UK. And he was very plain at Jackson Hole, Wyoming, with the Fed meeting. He was playing at Davos. He's playing at one of the London economic summits. I mean, he said it 2 or 3 times, the UN, I believe. Anyway, at major forums like those, basically says that, we need to have a new currency. We need to base it on sustainability. I'm paraphrasing. We need to make sure it is an unbacked, not backed by anything, unlimited, no limits to the amount, digital currency. That's basically worldwide. So he wants a cashless system, digitally backed, controlled by the bankers, fiat system that they control. That's what they're striving for. At least that's what he says they should be striving for. So I wrote further on my thoughts on that. And I said, Bitcoin's not going away, Ethereum's not going away, but the idea that the banks will adopt Bitcoin or something like a Bitcoin and use that as their system, I think is a far-fetched idea. And I know there's pretty smart guys in the blockchain space that know a lot more about it than I do. So I'll admit I could be wrong, but why would they give up control? Why would they say everyone adopts Bitcoin when they could easily create their own because it's
Right.
a cut and paste system. It's an open source system. So they could cut and paste Bitcoin and put their name on it, the FedCoin. I just got information last night because sometimes I get insomnia. I shouldn't give out so much, too much information. But I got back on the net and I listened to a guy after we do it this morning about, I guess there's been a proposal just like yesterday on a new FedCoin
Yep.
being furthered. So I want to study that, and maybe I'll put out an alert for an update for my subscribers, but it's probably on the net somewhere, so I may just link to it and send it out. But my idea is that the banking elite, will create whatever they want, and they'll force you probably into that. So it would be something like this. Hey, you can use Bitcoin for whatever peer-to-peer you want to use it for, even business to business at some level. But you can't buy groceries, buy a car, get a mortgage, or get a small business loan or anything tied to the government, which controls darn near everything using Bitcoin. You have to use FedCoin. Follow what I'm saying? I hope I'm being clear.
Yeah, no, completely understand. I mean, I think it's been in the news for a while where central banks are creating their own CBDCs, their central bank digital currencies, and I think even in this last stimulus that was passed, I think buried in it was a Fed type of a Fed coin and a digital wallet. So I think exactly what you're saying. That's the direction that they're moving into. But gold and silver, we first things first. We still love these two metals.
Yeah.
Gold and silver, they had a pretty massive crash in March as silver went under that price floor set back in December of 2015. Can you share with us what caused that crash and your view of the precious metals market since then?
Wow. Well, one, I would say, fact is that gold silver ratio for all recorded history for over 5,000 years, the gold silver ratio has only been to 100 twice before, and we went over 120. And every time it's gone to 100, it's forecast a financial problem, to put it in polite terms. So since this is an all-time high in over 5,000 years, it's probably, or could be, forecasting one of the worst financial crises ever, which goes back to my, quote, the next Great Depression will be worse than the last one. Now, maybe it will, maybe it won't. I hope it isn't, believe me. But so it could, so that's part number one. Part number two, what caused it? There's so many. That's a why question. It's really tough to answer that. I mean, the answer's simple. There's more selling than buying. Was there real selling of physical silver? No, there was massive selling in the futures markets, and the people that control these markets know that if they get silver or any commodity that's leveraged down to a certain point, it starts margin calls. So selling begets selling. So all of a sudden you're in at a pretty doggone good price and you're looking at a paper profit, and all of a sudden silver falls off the cliff and goes straight down. Now all that profit evaporates almost instantly, and your broker calls you up and says, do you want to send me, $45,000 by wire, or I don't have it, you're sold. So that selling begets selling. The other thing that no one ever talks about is how the futures market really works, and how advantageous it is to the shorts. It was more selling than buying. A long answer. That's what caused it. It was totally unrealistic as far as the price goes. It was a spike. We're already seeing the gold silver ratio come down. I think it's 110, which is very, very high. I admit that, but it's not 120 whatever it got to. And silver's outperformed gold a couple of days. That's one of the things I look at very carefully. I'm a believer in the Dow theory, and I'm a believer in the Dow theory for the metals, meaning that silver has to confirm gold or gold has to confirm silver. And that means that silver has to outperform gold. I like to see at least 2-to-1 or 3-to-1. So if gold's up 1% on the day, I like to see silver up 3% on the day. And I like to see that happen at least 3 days in a row. And we haven't seen that. We haven't seen that for a long time at all. And recently we saw silver outperform gold on a daily basis about 3-to-1. The other day it outperformed about 2-to-1. That's why the ratio went from 120 something down to 110, because silver has outperformed gold here recently just a couple of times. So I do think we've seen the worst in the metals, obviously on the physical side, which tells a lot of truth. Gold premiums are high, silver premiums are high, and it could be a manufacturing shortage like in 2008, where there's just not enough retail product, but there's enough silver commercial bars that can be made into commercial products, and that will, calm the markets at some point in the future. And I wrote about that in, I guess, this month, but I also used the word yet because, the PSLV stocks it with physical commercial bars. They use, 1,000-ounce bars like investors use 100-ounce bars. And then there are people waking up to the silver market that are quite smart and see the opportunity there. And then you've got this nonsense in the gold market with these 400-ounce bars that are going to be used to back up the situation. And you've got articles I still haven't had time to read, believe it or not, but I've skimmed them on, what's really going on in this physical market and be able to fulfill the contract with physical. And that's getting tougher and tougher to do. And there's delays. Had one wholesaler tell me it's hearsay, so I won't verify it other than it's hearsay, that there's a delay even on 1,000-ounce bars to get them in. And I don't know if that's true, and it's only one incident. But what I'm suggesting is that it could be different than 2008, not just a manufacturing crisis. This could be it. And if it is it, then you're going to see the physical market finally take over the silver price, just like it's taken over the palladium price.
Do you think the panic in the paper market is mostly over and gold and silver prices have regained traction and resumed in the bull market?
Yes, in silver, no in gold at the present time. I mean, we interview again in 6 months, 3 months, or a year. Yeah. I might have to change the story, but as it stands right now, I can make a really hard case based on the commitment of traders. Very favorable to the silver market, but not so favorable to the gold market presently.
You also touched on the paper market and the physical market. Can you share a little bit more of your thoughts on this phenomenon between paper and physical prices, and if it renders the spot price of gold and silver redundant?
All these algorithms, derivatives, computers, and the derivatives are setting the price, which is absolutely upside down. And so there's the problem. So now you say, well, wait a minute, David, what about someone comes in and quarters the silver market and sets this thing right? Well, that pretty much happened in late 1999 when it was announced that Buffett bought roughly 130 million ounces of silver. The price shot up and he took it off the exchange. He took 90 million. He took 130 million ounces eventually. He only gave him 90 to start, but we saw the price move. And so after that took place, the exchange made up a rule that says you can only take 1,500 contracts, which is 7.5 million ounces. So try buying, 130 million ounces now. I think there's only 95 million in the registered category. Doing it from memory, and I just looked about a week ago, but I guess so many numbers in my head. So there isn't even that much that's available right now compared to what, Buffett bought. So there's that aspect, but that doesn't mean it couldn't trickle out. And there's a demand where, it's force majeure. I mean, where the exchange says we can't deliver. You get the PSLV, from Sprott, you get the SLV, which purportedly has physical, commercial bars. You've got a few others out there. If they all load up and then you get a couple of hedge fund managers that really know what's going on, like you get a Ray Dalio type that understands silver is far superior to gold as far as leverage is concerned and decides, like Buffett, they put in less than 2% from their fund into it. They don't even have to report it. When Buffett bought that 130 million ounces of silver, which is a little more than I've got, I looked for it on their annual, and it wasn't on their annual. And I go, this is ridiculous. And of course, I had to deep study and think, and it wasn't that big of a algebra problem, but it was under miscellaneous. And the reason being is the law is very clear that if you have less than 2% in an asset class, you really don't have to list it. So he never listed the word silver in there. He just put in, and I might have missed it. I didn't read because there's a lot of fine print. But basically, miscellaneous was exactly what he paid for the silver. I calculated probably what his average price was times 130 million ounces. And that line item miscellaneous matched what the silver purchase would have been in dollars and cents, but yet it was less than 2% of the total Berkshire Hathaway holdings. So it was excuse the metaphor, spit in the ocean. It really was inconsequential for one fund. Think about that. One fund kind of cornered the silver market, or maybe temporarily, represented 2% of their holdings. And there aren't a lot of funds that are the size of Berkshire Hathaway, but there are some out there. And then you got the other attack. You got the commoners that understand the monetary system, and that represents 0.02% of the financial wealth of the world. 0.02%. So think if it went to 0.04%, there'd be double the demand on silver as a safe haven, means of payment, backing cryptocurrencies. I mean, just think about cryptocurrency took off that was silver backed, and all the millennials decided they'd rather have something backed by silver than something backed by somebody's promise to pay you more crypto. Well, where could that go?
There was also news of difficulties in physical deliveries on comics. We touched on that a little bit, and London. It resulted in a breakdown of price discovery in the markets, and some price feeds actually stopped updating, resulting in the big differences between spot prices globally. Do you know more about this issue, and could the physical shortage of bullion finally cause the paper market shenanigans to collapse?
Yes, the latter part of the question, absolutely. That's exactly what's happened basically in the palladium market. Why even bother with the futures market anymore? I'm not sure. The shenanigans that are going on with delivery of physical I'll be honest, I don't think anyone understands it fully outside of the super major players. And I'm not arguing with any of my friends, but I don't think any of us could really explain this exchange for physical nonsense that goes on. I had a hedge fund manager that I met years ago on one of the mining tours that we do, and he wrote about it. It made a lot of sense. I saved it, I printed it out, I read it about 3 times, but the more I thought about it, I thought, I don't think that's exactly how it happens. But there's a lot of, let's say, nefarious goings on in the paper exchange market for physical precious metals that is just another game and another game and another game that continues to increase the supply and maintain the price that's kind of meaningless, and all that stuff needs to be cleared by the market. It's either you have the cash to buy the gold or silver or you don't. And if you want to hedge, you make it a private contract between yourselves of what you want. I mean, you could do private financing for a mine. You could say, hey, all you silver bugs out there, I've got silver in the ground right now, and we've got this much, and it's going to cost us this much in today's dollars to get it out. So I'm going to start a private company, and I'm going to give you silver at $25 an ounce starting in 2022, March 2nd. And all people that are willing to take that risk with me will be able to buy that silver at that price. And I guarantee it won't go higher than 10% a year for the next 5 years. And it's a 15-year mine life. Who's coming in? No banks allowed. How would that be?
Dealers in Singapore, where we are, we're also largely sold out of physical bullion, and pre-orders for gold and silver from certain refineries could stretch out as far as 10 weeks. And the demand from bullion buyers was so huge, it was something that we've never seen before. And from a certain perspective, people were trying to exchange fiat money for whatever gold or silver they could buy as quickly as they could. Do you see this as somewhat of a sneak peek of all those zeros and of what hyperinflation could look like, where there is this mad rush to exchange paper currency for physical gold and silver or something of value?
Absolutely. It's a good real life case for what's called backwardation in the futures market. So let's just use silver. So the spot market has no limit, basically. So spot means I need it right now. So if silver's at $15, but you stop your whole production line because you don't have silver, you're out of business, you're very willing to pay $20 to keep your business going. That's on the industrial side. On the finance side or the monetary side, someone's saying, you know what, I don't trust these guys to ever be able to deliver again, so I'm willing to pay $20 now, even though I can go out in the future and buy it for $15.50 3 months from now. Now, in most cases, the Sharpies, the futures players will say, this is great. We have this much silver in the vault. Let's go ahead and sell it, take that money and buy at 20 and go into the futures market and buy it back at 15.50 3 months out and make a small fortune. And that's worked several times in the past. Except what if this time it is different, like I alluded to earlier. And when that 3 months comes by, they can't replace it. And that's the deal right there. So could be, I'm not saying would be, could be where that continues to increase. And that's what we're seeing right now, whether it will subside or not. So the way you'll know is what the delays are. So right now, 10 weeks. So now a fund manager says, I need 1,000-ounce bars. I'm starting my own fund. I'm going to take delivery. And I just called up XYZ smelter, and the smelter is going to send me 1,000-ounce bars starting 12 weeks out. I'm getting all of his supply. He's made all of his contracts to everybody else and told them, persona non grata, we're not supplying you. We have a new buyer. We're going to start supplying that buyer with physical silver bars starting in June 1st, 2020. So now all of that physical starts going in this fund, but the fund person knows that's physical that he's made a contract with at X amount, maybe higher than the futures price slightly, but he needs to lock in these pathetically small prices. So where does he go? Well, he goes into the PSLV, the SLV, a few of the other physical funds or holding companies. Goes into the exchange, maybe he takes 5 million off of there and moves it from the registered into the eligible category, kind of quietly, but it's still 5 million of physical, 5 million ounces of physical. And so he starts hitting a vector of about 3 or 4 different places, right? Maybe even takes on one of the larger broker dealers in the market, such as a few I won't name, but have been around for a very long time and deal in pretty sizable amounts. Maybe hits one of the wholesalers and asks them, how much physical bars have you got? Maybe he asks the mint, hey, have you got any backlog of silver, which they don't. So there could be several vectors in play at one time. And all of a sudden you call up and say, hey, I just want the generic silver bar, the ones that you pump out pretty easily. What's my wait time? Well, it used to be 10 weeks, but now it is 16 weeks. What? Yeah, it's 16 weeks. 16 weeks to get, $100,000 worth of silver? Are you kidding me? No, that's what we're being quoted by the refiners right now. Do you want it or don't you? That scares me. I think I'd rather pay $25 now than, $20 in the future or 15 or whatever it is, because I want it. If I got to wait 16, what happens in 16 weeks if it's not here? So you can see it could go. I'm not saying would go. Could go that direction.
One of our viewers out of the blue wanted me to ask you if silver prices can continue to be artificially suppressed, given that dealers around the world have sold every bar, every coin, and are facing restocking problems brought on by, of course, the CV.
Yes, as long as you could buy 1,000-ounce bars off the exchange at the published price, it could be. But once you get that point where you couldn't deliver 1,000-ounce bars off the exchange in a timely manner, then it's over.
Another viewer, Dayton Fisher, also wanted to ask you, how will the shutdowns affect gold and silver mining stocks? What happens if the shutdowns become protracted?
It's an asset in the ground. So whether you're mining the gold in the ground or leaving the gold in the ground, you still got gold in the ground, which is a pretty good vault. So that always has value. So if gold goes from the $1,600 level to $1,950 and makes a new nominal high this year, Patrick, people start thinking, well, that gold company isn't mining, but they still own all that gold. And gold has gone up, 40% this year already. And I think it's going to at least, 2,500, maybe 5,000. That looks like a pretty cheap way to own gold, even though they're not mining it yet. But at the top of the market, gold mining companies are usually valued at 30 30 times earnings, because the PEs don't work in a mining analysis. They do kind of at the end of the market. But what the more commonly used rule of thumb, and I know the Denver School of Mines might beat me up, but I've been at this over 40 years, is 1/10 the price of gold in the ground. In other words, not inferred, but MI, measured and indicated, true, ore grade metal. So if you've got X price for gold, that gold in the ground, whatever that amount is 1/10 X. And that's a pretty good idea for what the market capitalization of the company will be worth. So if you're looking at that right now and you say there's X gold price, but I can buy that gold sitting in the ground at 1/100th X, that might not be a bad way to speculate. Now, it's not gold per se. It's not in your hand. It's not a safe haven. But it is a pretty darn good way to speculate on on what's happening in the real market. So I wouldn't give up on the mining industry. I've told everybody to go on hold with most of our holdings. I went through every stock in the top tier yesterday. Pretty long video I do for my paid members and showed them stay away from these. I think 4 or 5, and these 2 are good for purchase right now. And it showed them why. And told them why I think those 2 or 3, I think 2, were worth purchasing at present. But don't be in a big hurry to get back into the mining market yet.
David, before we wrap up, can you tell us about Lode?
A little bit. If you want to learn more, you can just go to the website. They have a video. All their stuff is really professionally done. It's much better than any of the videos I make. But you go to the symbol for silver, ag.lode, Lode.one. That is a URL. Might not sound like one you're familiar with. ag.lode.one. And you'll get a very good video. Could explain it better than me. But the basics is it's a silver-backed cryptocurrency. There's 2 sides to it. There's no fiat involved or other cryptos. The whole thing was funded by physical silver. That's the only way you can participate as a founder, I'll call it. They don't use that word, but foundational amount of silver was contributed by people that believe in reinstituting silver in the modern age, which means through a blockchain. And then there's the other side, which is the actual token itself, and that's called AGX, which is the symbol for silver with an X behind it, so AGX, and that's what actually trades in the market. And you can buy those. There is a premium on those, just like there's a premium on a silver eagle or a silver maple or a silver round or a silver bar. There's a premium on it. But it has that premium just like a silver coin would. And it is all backed by silver, physical silver. So it's a pretty interesting project. Taking longer probably than everybody wants. But, being a business guy myself and having come from a pretty high up corporate entity, I know that the best laid plans of mice and men, usually take longer and don't come out exactly the way you plan. But this one's on track, and I'm pretty happy with it. I certainly, if egg comes on my face, I'll accept it. I've certainly failed in my life, and I'm sure I've got a few ahead of me still, but I don't think this one will. But it's been touch and go a couple times. But I think we've done a lot right that has caused failure of other ones, because the powers that be, or the powers that want to be, have shut down some of these metals-backed situations because they don't meet the requirements. This one does. It's out of one of the best jurisdictions for cryptos, one of the best knowledge bases. It's sort of the Silicon Valley of the crypto world. So pretty happy. Sometimes it really pays to pay up and get the best to make sure you're doing everything by the book and crossing all the T's and dotting all the I's.
David, can you let our listeners know more about your work and especially the Morgan Report?
You bet. You just go to our main website, which is themorganreport.com. If you go to the right-hand side, you can sign up for a free letter, which gives all the broadcasts I do like this for free. Or you can go over to the blog. I suggest you get on the blog. There's a lot of videos. And if you're a U.S. or Canadian, I know you're in Singapore, Patrick, so it's not available, but someone that's in Singapore might have a friend in Canada or the U.S. On the right-hand side of the blog, there is a click-through for a precious metals program that buys very near spot. The highest you're paying right now is 6% over on silver, but you are buying a commercial bar. but you're buying at that price. And then when you go to cash out, you pay the premium. So if you're buying silver at spot plus 6%, and 6 months go by and things come back down with the wait time is 2 weeks or whatever, the premiums will drop from 5, 6, 7, 8, 9. I've heard as much as $10 over for the premium or the spread. Then and it drops back to the normal 250 or 3. Then you can cash out then and be far ahead of where you would be if you buy it now. But here's a delay. If you buy the silver in bar form, you can have it delivered that way. So I mean, there's no funny business going on. If you buy a 1,000-ounce bar at 6% over, you own it, and you paid that, and you didn't pay any more for it. So it's a pretty good program. I've been doing it over 10 years, never had a problem. Several of my members have been on it. I've never had a complaint yet, and it's probably more than 100 people that I know are involved in it. Just from me telling them about it. As far as how many there are total, I don't know. I'm sure it's in the thousands somewhere.
Is there anything else that you want to let people know?
Just that you're doing a great job. You get some really good, smart people on there. I learn from your channel. I'm always learning. You have great questions. You got a great demeanor, and I appreciate what you're doing. And keep it up. I think Silver Bullion TV is something that was needed by the marketplace. You probably sensed that and came in and filled it up. So thank you.
Thank you. In all honesty, you were one of the guys at the very start, which got me interested in silver. So I should be the one to thank you for all the work you've done as well.
Thanks. Appreciate it.
Sure. David, we appreciate the time you've given, and I hope we can do this again sometime.
And me too, Patrick. Thank you.
That was David Morgan, publisher of the Morgan Report. For more of his insights on silver and the global economy, please visit his website, themorganreport.com. If you like this video, please hit the like button and subscribe to the SBTV channel to be updated on new content, and do also check out the SBTV podcast on iTunes and Spotify.